Hello traders, this is Rich from TradeSight. This is a look at the market preview for Friday, May 10th, 2013. We had a sloppy day today where we had all the major averages lower by at least something. The ES was down 4 handles, the NQs were down about 3, and the Dow was lower also by about 22. Weakness there was also complemented by weak internals. The advanced declines were lower on both sides, but not significantly. The New York trend was higher on the day at 1.09. VIX was higher on the day by about half a buck, and put-call ratio finally took a bounce here. That was up 34 cents. That's definitely a chart that we're going to be looking at today. So let's move on and take a look at the. Before we move on, also I just want to point out that the Japanese yen has broken through that 100 level, which was key resistance. It was 8/8 on the Murray Math box. Right now they pushed it up above there, so the yen is about 1.75% weaker versus the dollar right now. So definitely pushing out to new range high in the yen dollar pair here. So let's move on and take a look at the. Well, let me put up the yen chart first, just so you can see the levels, and then we'll look at the major futures. All right, now here's the dollar yen pair, and you can see how this 100 level, which is 8/8 on the Murray Math box, had been the barrier. We touched it here. We had a sharp fallback. We kind of recovered back up to that level, couldn't get through it, had another fallback, but this time set up a higher low. So now it's effectively pinching through this, if you will, across here and up here, pinching up through this this rising wedge. Next level to the upside is going to be 101.5 roughly, and then above that, the more important level is going to be 103 1/8 if the market can keep rolling in favor of weakness in the yen and strength in the dollar there. So a couple key levels to watch down below. The 6/8 level converges with that rising 50 DMA, so that'll be the big level to watch on the downside, and that's also going to be the area of this prior pullback termination. So there's your near-term technicals in the yen. So let's move on and take a look at the SPOOS futures. Here's the ES futures. We got up to 1625 yesterday. And you can see we attempted to push higher here today. We actually made a higher high intraday, but couldn't hold on to it. A lot of times when you first get up to that 8/8 level, it acts like a magnet and has to be traded a little bit, just like a market kind of usually wants to trade the 200 DMA before it moves on through. Oftentimes when you get to that big level, it'll be traded fairly well before it moves. Sometimes it doesn't take that long. Sometimes it's a little bit more protracted, but certainly a very formidable level to keep in mind. Above, we've got 1656 1/4 is going to be your plus 1/8 level, so that's your next level overhead. And this is a great example of how important these Murray Math levels are, especially when you're breaking into new highs in the market, because there are no other prior highs to use as a reference point. Of course, you can do your fib extensions and things like that, but the Murray Math levels are definitely something that the institutional folks pay attention to, and so they're usually very important to have handy. So if we roll to the downside, the next real support, if we break under the prior day's low, is going to be that 10 EMA, and it's also roughly the area of that gap from the non-farm number. So that's a double level down below. So to the downside, we're going to have pretty strong support just above 1600, right in that 1605 level. Here's the NQ futures. NQs really were kind of choppy. Definitely took a shot at that 8/8 level. Couldn't really giddy up and get through it yet. So for now, it was rejected. It was definitely the NQ side is definitely more overbought than the New York broad market side. You can see the extension above the 10 and above the 50 there. And you can also see how high the MACD is, and the CCI is also excuse me, also showing a little bit of a rollover here from this strong push to the upside. So on the upside, 8/8 level is definitely the biggest, strongest number, 29.68 3/4. Then you've got today's high to keep an eye on. That's about 29.77 3/4. Then above that, your plus 1/8 level at 1307, 1308. To the downside, the big reference point is going to be the low from that gap up on the non-farm number, right around let's call it 29 1/4. So those are your big levels there in the NQs. Here's the 10-day trend. We closed at about 1.08 today, I believe, on the trend. So we didn't move the needle and get this any more overbought. We're still hovering in that middle area, so we're not overbought here on the New York trend. So if they want to keep pounding stocks higher, the New York trend is not saying they can't do that. We're not anywhere near the 0.85 reversal threshold of being overbought. All right, internally now, taking a look at the S&P versus the TLT. We talked about this prior high being important. I just moved that trend line up here. I want to save it there after the close. Actually, let me bolden this just because it's pretty important. So we do that is you go to your edit properties if you're in eSignal. I want to change the style. I'm just going to I'll leave it solid because I already have dash lines up there. I'm just going to extend the width here just to make it a little bit more visible. I'm going to make it yellow so it doesn't conflict with our other red lines. So here's a look at the at that prior high in the S&P TLT cross. So what we're seeing right now is we're kind of bumping up against that threshold where this ratio failed before, and then we had this rollover to the downside where there had been risk put on a steady basis, and they weren't really willing to push it any further, where the bonds didn't want to go down anymore, or the actual futures didn't want to go up. So this is going to be a key area, and certainly when this gets taken out, if the bulls can take this out to the upside, that'll be a notable breakout. Keep in mind here that we've moved pretty far to get up here in a fairly linear move, so we may need to handle off here a little bit and just spend a little time here and make a little bit of a either handle or reverse head and shoulders here to the upside. So key level here, and this might be some formidable or could be even long-term resistance. All right, now the one thing I wanted to point out was the total put-call ratio. The total put-call ratio did spend 2 days very, very low, down below the 0.6 level, which is not quite, but very, very close to the reversal threshold of 0.5. If you settle, at or below that 0.5 threshold, usually you get a very sharp reaction within 72 hours to the downside. What we had was that level. We got stretched down to that level, didn't quite get through it, but we did trade 2 days in a row right down there. And what that did, that was good enough just for the near-term buyers to exhaust themselves with quite a bit of enthusiasm in the market. So that's a pretty heavily call tilted ratio when it prints like that. What that just does is it really just kind of takes a little gas out of the tank, a little wind out of the sail, and exhausts the market for in the short term here. Now remember, you want to take this in combination with the 10-day trend. The 10-day trend is not giving an overbought reading. This did get down in that area, but didn't get all the way to the 0.5 reversal threshold. So we're going to watch those two things in concert, and when we do get those readings, we're going to play it properly. All right, now taking a look at the multi-sector daily chart. The XAU, that's the gold line, didn't do too much. Even though the market was fairly weak, we didn't see a big pop or big rotation into the precious metal miners. We did see, the BTK it continues to level off here. We saw a little money come out of the banking index, the BKX, and the SOX was reasonably strong here, making a new high on the chart here. But let's take a quick look here at the major sectors. Here's a quick look at the individual sectors. The SOX was a top gun on the day, made a new high in the move, up 0.5%. We don't have any seeker or Comer countdowns in the way yet, so they can still walk that up higher now before we're going to have any problem with those. The housing index was also strong. The cyclicals was strong. Saw weakness in the transports. The BTK was weak. The XOI, which is oil and gas, was also fairly weak. The utilities was much weaker than the market, with some money still flowing out of there, and also the hardware names were fairly weak. XAU, as you can see here, was kind of middle of the range as far as performance goes. Here's the SOX, which is printing new highs. We did frame shift just recently, so some good space now between the levels. To the upside in the SOX, the level is going to be 468.75. That's that 6/8 level. Relatively minor level, but that's the one to watch. Down below, this 5/8 level is going to be important because the 10 EMA is starting to catch up to there. We are fairly extended above the 10 EMA, but not terminally so, I would say. The other chart I want to look at was the BTK. BTK is rolling back to the downside here. Definitely had a very negative day, but didn't really take out that 10 EMA yet. So it's below the gap up from the non-farm number, but not really showing us any kind of a rollover yet until we get down below that 10 EMA. That's the game changer. If we get below the 10 EMA and then follow through to the downside, that'll be the game changer. All right, the other one I want to take a look at was the XAU, because the XAU, we had that little mini breakdown out of this little pattern here a couple days ago. We broke down, settled at right below that range. But all we did was spin around the next day and have a fairly high settlement. So basically, that range is still intact. We went up here and took a shot at that 1/8 level at 112.50, but it got rejected and closed back within this range here. So this is still range bound. So even though they're trying to move this around, it's still range bound. The one takeaway from here though is now the volatility is starting to expand. And a lot of times when you see that volatility start to expand, that can be one of the early clues that you're getting close to potentially pivoting and making a move. So definitely keep an eye on that one. All right, folks, that's going to be it for today. As always, thanks for listening. This has been Rich from TradeSight.